Coming up on this week's Redcast.
I don't think anything's summed up on any Redcast more the JWG ethos, which is we got to get compliance to be better, faster, cheaper with lower risk. And I think that this being a greenfield area where we can finally get out and explore.
Whereas countries, that don't have, as significant concerns when it comes to monetary policy and reserve currency, monetary stability, I think they're going to be more aggressive here. And I think the prize for them potentially would be very beneficial for their economies. And gradually, that cost-benefit analysis, as Patrick is saying, people will get more comfortable. People will realize what this is. People will sort of develop the right architecture and think about architecture the right way. And you'll start to see, this become more viable even in more developed, markets.
And standards to me is kind of the key for everything because it's a real recognition of collaboration across different jurisdictions, different countries, different kind of payment systems. But it's, that's kind of the roots of where Swift started was to have a messaging service based on standards for this interoperability so that payments could flow cross-border.
We're talking about, is this critical infrastructure? If you do this right, it's the internet.
The prize is improved transactions. That's really what it comes down to, right? So I think it's a perfectly natural progression as the economy goes digital and payments go digital, that the currencies that are used in those payments go digital as well. So I think there's lots of challenges and lots of reasons, risks to be addressed and a lot of things to get worked out. But this creates a great opportunity for us. Whether you're looking at consumer use cases or you're looking cross-border payments, it's a great opportunity for the industry and maybe for some of us, a once in a career type of opportunity.
Welcome to
Redcast, where we shine a light on banking digitization.
Hello, everybody. Welcome back. This is PJ DiGiamarino, CEO of JWG. I am really pleased today to be recording this episode of Redcast at the end of June. We've had a deluge of regulatory documents about central bank digital currencies, and there's many, many angles to them, but we're all about digitalization, what it actually takes to get it done. And I finally saw some exciting documents about how that's going to work. So I don't think anyone really knows the future of CBDC, and we're certainly not policy folks here today telling you exactly all the ins and outs of all the different debates, but it's certainly something that's under the central bankers' microscopes, and they're exploring ways they can use these new forms of money to incentivize commerce, reinforce the resilience of the system, and figure out how to make global finance work better. So there's lots of new emerging tech angles to that, lots of exciting things that could happen, and payment solutions and having the foundations for a new system that actually pulls all this together. However, a workable CBDC infrastructure is not going to come out of nowhere. And I think one of the themes I pick up as I read these reports is that without international collaboration, we're going to have a hard time piecing the different bits of the system back together again. So what we're focused on is how close are we to that reality, and what's it going to take to make it happen? So who better than to bring in Tom Schack from Swift? Tom, do you want to quickly explain your role?
Hi, BJ. Thanks for the invite today. I'm Tom Schack. I'm the Chief Innovation Officer at Swift. I've been in the role for approximately 18 months and joined at as you said, as a really kind of dynamic and exciting time in the launch of our new strategy and innovation being a key enabler for the execution of that strategy. So happy to talk about these topics today.
Thank you. And Bill, why don't you let people know what you've been up to and what we can expect from you today?
Yes, hi, Bill Benwell. I'm a regulatory lawyer. I focus on financial regulation and compliance issues across Europe and the US. I'm a former regulator, in-house counsel across infrastructure and large financial institutions. So I'm hoping to kind of give a little bit of perspective on some of the regulatory and potential control issues involved here.
And Patrick.
Thanks, BJ. It's good to be here with Tom and Bill, and I'm the Chief Strategy Officer for Securrency. I'm a recovering lawyer, so it's I'm pretty good right now. So, but we Securrency is really a financial services infrastructure, markets infrastructure company, really blockchain based. So we're not our own. Didn't build out our own proprietary blockchain, but we leverage all blockchains and legacy systems in a very interoperable way. So we're just closed our Series B round recently, and we're in expansion and growth mode.
Well, fantastic. What a better way, it couldn't be a better way to start this kind of discussion, because I think this is new ground. This is new territory for standards. But obviously there's a huge standards land grab going on right now, whether we receive it or not. There's a lot of underlying infrastructure that we have that we could potentially use to adopt to it. Tom, can you give us a feeling for like what is actually going to take to transact the digital euro with the digital dollar and the E1 and the Bitcoin? And how does that work today? And is there a way that you can see that working for CBDC?
Yeah, I mean, as you said, PG, I don't think anybody has the answers yet, and we see lots of activity within the central banks. We see lots of activity just in general. I mean, this is as I said earlier, a really fascinating time. We have to remember that a CBDC is really a new form of currency for the country, and with that comes a tremendous amount of decisions and policy decisions, and I think really to start with is for the central bank to be clear about the why. And so before we start jumping into solutions and standards and how things are going to work, we first and foremost need to understand what is the driver and what are the policy objectives for a country to want to issue a digital version or new form of their currency to start with. And then once you understand that and what segment it might be pointed at and what those objectives are, we can start to look at some of the possible ways in which you might be able to provide solutions for that. We just recently did publish a discussion paper around CBDCs, and it wasn't really based on what Swift does or how things work today, although we've been doing that for decades and have lots of knowledge and experience in that area. But we really tried to just say, look, if you step back, look at the characteristics of what's required in the infrastructure for a robust payment solution, right? Including a new form of money, which is a CBDC. And the list of things we found were not surprising. Strong digital identity with security and privacy, a reliable, scalable network, interoperability, between disparate domestic payment systems and different types of payment providers. And then, as you say, standards. And standards to me is kind of the key for everything, because it's a real recognition of collaboration across different jurisdictions, different countries, different kind of payment systems. But it's that's kind of the roots of where Swift started, was to have a messaging service based on standards for this interoperability, so that payments could flow cross-border. So I think the anchors are really around identity, security, privacy, and standards. And I think everybody knows, and especially the people who follow the regulatory community very closely, that our move and the industry's move to ISO 2022 is well underway. We have very good early adopters, and with that, you get richer data. You get a better ability to service your customers, and you do that in a much more kind of efficient way.
Yeah, and it's great how you leapt right to the data, which is obviously at the heart of any of the standardization. But there's also a big infrastructure ask here for standards as well, right? And I want to go to Bill next, because I think the control of this infrastructure is a really fundamental question from a central bank's point of view. Now, how close are we aligning to aligning the way from a legal perspective that you can trust the infrastructure across the different jurisdictions?
Thank you for that. I think Tom, to piggyback off what Tom said, I think it's exactly right. It's a big ask. There's two kind of ways you can approach this. You could sort of have a complete public sector-led infrastructure, which is completely owned by a central bank, from everything from the ledger, the core ledger, however they're going to sort of reconcile payments to point of sale, to engagement with retail customers. You can completely run the entire system through a central bank, and that's probably not feasible. You're probably looking at a system that's going to have some private sector involvement, as we do today with cash. The private banks keep reserve accounts at the central banks, and they facilitate the way we make payments using those reserve accounts. So you're probably going to have a public-private kind of hybrid model when it comes to CBDCs. As Tom was saying, we don't really know, but that's sort of my guess. So when you're talking about these type of models, what you really have is government setting eligibility criteria for infrastructure to participate in these market systems. And that's similar to the Federal Reserve, open market operations, reverse repo operations, in Europe, primary dealer operations. The government says, if you want to participate in these markets, these are the eligibility criteria you have to meet. So you're talking about a CBDC, and if it's truly functional and truly system agnostic and truly open, you could be potentially opening up a variety of market participants to these sort of strict eligibility requirements who are not used to it. And one example is a supermarket. A supermarket, normally has a banking or credit partner to help them manage payments and to help them interface with customers. Well, now all of a sudden, the supermarket, if it wants to access its own wallet and access its own cash and facilitate its own interaction with customers, has now all these sort of resiliency, privacy issues it needs to be sort of concerned about. And that's also a challenge for regulators. To make a CBDC truly open, functional, you need a system that the largest, most sophisticated to the smallest, least sophisticated market participants find value in. And these things are at times conflicting aims. If you think about cash, the only real control when it comes to cash is security. If you have it, the one thing you're worried about is not losing it. Well, the CBDC is no different, except that what's involved in not losing it is a lot more complicated than cash and involves me relying on a lot more people to keep my cash safe. So I think in order to make this work, you're still going to need banking partners. You're still going to need market linchpins. You're still going to need this sort of big infrastructure to help people keep their money safe. I don't think we're looking at a system that's truly sort of agnostic when it comes to infrastructure and agnostic when it comes to participants like cash is. You really are going to need a robust control environment, big participants who can meet eligibility requirements to participate and to facilitate CBDCs and to engage with customers and meet those strict privacy concerns, strict resiliency concerns, interoperability concerns that Tom was alluding to.
Yeah. No, that's some great points there, Bill. I guess the thing I take away from that I like most is that, going from a paper note to digital means you need all that digital infrastructure around it, and you need to make sure that you're fit for purpose in being able to manage that. And it makes me think of Patrick's business, because he's probably learned some lessons in deploying DLT or the blockchain. What comes to your mind when you think about this challenge ahead for CBDCs, Patrick?
Well, a lot has been said here, by both Tom and Bill about interoperability. So, I think that's obviously a starting point, and I do also appreciate the focus on privacy. And I guess the way that we think about it, because, and I hate to put it this way, because it just sometimes you're living with technology for so long that it just seems sort of obvious, right? I think that the technology issues are not quite as thorny. If you start with the right infrastructure, I think that, there's been a lot that's been done, and I'm not saying that the people who are working on it aren't bright and aren't thinking about some very important issues. They certainly are. But I think that sometimes, those things can be exaggerated. I actually think the technology is here, and we certainly bring a lot to the table, with the principles that we've applied to digital securities. When you think about policy enforcement, that sort of thing, it's the same principles that you would apply in this case. I think the bigger issues, of course, are around policy. It's a neat idea to think about, but people throw the word CBDC or the acronym CBDC around as if it means one thing, and of course we know that it doesn't mean one thing; it means many different things. And the definition that you choose is, in my opinion, the most important thing. If you start off with the right definition and the right policy, it's not too hard to move technologically in the direction that you really want to go. I'm more concerned about getting that policy right. I obviously begin with the premise that a direct account based CBDC is, I'll use a soft expression, crazy. And I think that there's, to address a lot of the issues that Bill's talking about, those are things that the private sector is particularly adept at solving. So I think getting the policy right is sort of the starting point for this, and then the technology will certainly follow. So that's kind of the way that we think about it from macro perspective. Drilling down into the technology. And again, Tom obviously knows a thing or two about this, given what he does. But we have focused very heavily on interoperability, but not just interoperability of in terms of the business logic, which I think there's a lot of pretty good work that's been done there. But most importantly, interoperability when it comes to compliance, because any CBDC is going to have to move quite across quite a number of different environments and be able to retain some central policies that or enforce as it moves in an automated way, some core policy. So we think about those things and architecturally how we can solve for that. That said, I'll close on this. We're also concerned about how far that goes, and so when people talk about CBDCs, they're usually talking about programmable money, and when they're talking about programmable money, they're really introducing a lot of really specters, in my opinion, that have implications for privacy. They have implications for who actually does control monetary policy, at a very significant, on a day-to-day basis, really, if you can think about it that way. So, and of course, the ability to manipulate currency to, enforce social policy. All of these things are quite significant and quite frightening in my mind. So, again, back to policy, getting that right will guide the technology in the right direction.
Hey, PJ, I think we should also separate out kind of policies that are new or monetary policies that would come along with launching a digital currency or a new form of money versus the policies and standards that are kind of very well understood from something like CPIM, right, and BIS, right? So the policies that we need for payments and market infrastructure, those principles are written down. That's baked into market infrastructures and networks around the world. So we shouldn't kind of go down the path where because we have a new form of money from a central bank, that somehow the policies and standards and even the expectations for things like scalability on the networks that we have today need to be kind of rechecked and revisited. I think a lot of really good work and a lot of clarity has come out of the industry bodies and the BIS in the last decade. You know this better than anybody because of the reg intelligence that you do. So I think we need to really make that differentiation between monetary policies or objectives for launching the digital currency from the payments infrastructure that's used to actually to carry and support that. I think that's more than a subtle distinction.
Yeah, I agree with that. I think a lot of it breaks down towards domestic versus international aims, because if you think about domestically, a lot of countries are improving their internal payment systems. The UK is upgrading its RTGS, renewing its RTGS settlement platform. You have a variety of countries looking at sort of improving their settlement systems internally. But if you think about from a policy perspective, you think about a CBDC in terms of financial inclusion and all these things. It's really no different than just improving sort of the speed of payments, improving people's access to bank accounts. I mean, that's sort of the theme that a lot of countries are already undertaking anyway. But if you really want to think about what some people, the sort of buzzwords people throw around, and so the big aims of CBDC, you're really talking about international interoperability and sort of the reserve currencies getting involved, me being able to change my CBDC for your CBDC to facilitate international trade. And as Tom was saying, these principles already exist at international level. We already have CPMI. We already have global infrastructure to oversee uh, financial infrastructure at a global level. So outside of the domestic policy perspective, I think we already do have international regulatory environment to set these standards. When we start to reach the discussion where CBDC starts to become more than just about financial inclusion and domestic monetary policy and begins to get more into the conversation about international interoperability.
Yeah, it's a great point, Bill, and Tom, your point's well taken too. I guess the way that if you think about it, just what's a lot of the impetus, particularly in the United States, where you hear people, they say, well, gosh, we really need to do this quickly because look at China, right? They're so far ahead of us when it comes to this. Frankly, I'm more concerned about China's blockchain services network than I am about digital yuan. But the point here is, when you look at it, you say, well, yeah, let's look at what China is doing. That's actually not a model that I would like the United States, for example, to follow. The policies that underlie their introduction of a digital yuan and the way in which they're doing it are not, in my opinion, policies to be emulated. Particularly when you get into things like privacy and how you enforce social policy and that sort of thing, through the financial networks. So that's what I mean when I'm talking about that, right? If the impetus is, well, let's just be just like them, I'm kind of saying take a step back. But technologically, and I will also add, on the technology front there, because it reflects it as well, that we also advocate for a more open and interoperable system than the one that we think is going to be implemented there or is being implemented there. So just to add a little bit of color to my previous comments there.
But what are these new risks that you're worried about, Patrick? And when you talk about programmable money and something scaring you, I mean, is it you're referring just to the identity and maybe someone having more visibility to what you're doing with it, or is there more to it?
Well, look, I think about things like this, and again, I divide it into two categories, right? Sort of, what I would call sort of the micro dial on social policy and the micro dial on monetary policy. They're sort of two sides of the same coin when you think about the programmability of money, so to speak. Again, you see it in kind of social credit scoring in China and how that's tied into the financial networks. That's scary. We might put another gloss on it. We might call it ESG. It's the same thing at the end of the day. You're just kind of putting, a heck of a lot of power in the hands of, really a few folks, and even in a democracy, how you set those dials. It's not, you can say, oh yeah, we had a big discussion in Congress, but let's face it, it's good. The dials are going to be set by bureaucrats. On the other side is monetary policy, there's an expression that I always loved when I was doing some stuff in Azerbaijan. They use an expression, monkeys with bombs, right? Always be afraid of monkeys with bombs. Well, that's what I think about, lawmakers with, micro dials on monetary policy. Sorry, that bothers me. That worries me, right? So those are the two things I think about.
Sorry, Bill, I never think about policymakers like that.
I agree with the points you made, Patrick. I do think that people underestimate how much of this is already baked to the system today. GDPR is such a revolutionary concept in Europe, and I think a lot of people don't realize how much of your data when you build a supermarket. I mean, I used a supermarket example earlier. That banks and supermarkets and the people you shop, they actually have on you and can build a profile in terms of your spending. It's not a social credit score, but there's a lot of information that sort of is already out there regarding your spending. I think the concern about CBDC, and this is where GDPR becomes sort of relevant, is your inability to opt out of it like you can with cash. And so the extent that it makes sort of cash less sort of viable or less useful. You can take cash and go buy and buy something without anyone knowing what you're buying. But having said that, the flip side of that is, look, there's always going to be a market for cash, for that very reason. And there's always, you can't send a payment to North Korea, whether it's a CBDC or whether it's a SWIFT or whatever it is, you're not going to be able to do that no matter what. And there's always going to be a market for cash payments. And there's always going to be some type of government involvement, whether it be from a monetary perspective or AML, financial crime perspective, any kind of electronic payment infrastructure.
So let's focus a bit then on some of those barriers that are there today, and recognize some of those barriers are there because we want them to be there, as Bill just very eloquently pointed out. But what are some of the ones that we should be working on to enable CBDC cross-border payments to work effectively? And Tom, you just wrote this paper. What are your top three things that you sort of come off the top of your head about what needs to happen there?
Yeah, so I mean, we, at Swift, we're not advocating for a CBDC to be launched. We're not pushing for a pace. We're actually positioning ourselves, as the explorations move forward, and as decisions are made to launch a digital currency, to help our community and our members adopt that and to have the interoperability. So, to me, and again, in the discussion paper, we said is kind of the core characteristics that you need for that. To me, first and foremost is interoperability. I don't think anybody thinks that there's going to be a new network or a new form of money, and then we're kind of just going to close down on Friday and open up on Monday and flip the switch and hello new world. That's not going to happen. And financial institutions and banks have made large investments, have lots of experience and lots of maturity with very high volume scalable systems today. And that's just not going to change overnight. And so there's got to be a clear path for backwards compatibility and interoperability. I think that the second thing is, and Bill was touching on this before, is really around security and privacy. And we're in a very kind of special trusted position where we're the stewards of the data for our members and for financial institutions. This is not Swift data. This is our customers' data, and they've entrusted us, to process that. They've entrusted us to control that. They trust the governance that we have in place to protect their privacy and the security. And it's a huge responsibility, and we take that very, very seriously, of course. So the second thing on the list to me has to be around security and privacy. And then the third one, I think, is just the operational aspect of it, with reliability and scalability. I was looking at something today, and we won't go into cryptocurrencies, but for example, Ethereum today can process 1.5 million transactions a day. Look, that's impressive, and there's a lot of other advantages, that people are seeing in that network, but it's nowhere close to the scale that we see in any example in terms of volumes, and then not just the volumes, but running that at 5 nines and being able to scale that and have that kind of reliability. When you go and you tap your credit card in the UK at a merchant, it just works. It just works, and it takes a long time to build that, to build that and have that experience and to build that kind of reliability into networks, and especially complex interconnected networks. So I think that's probably the third one for me in terms of the things that need to be addressed that will help enable and even the adoption of a digital currency.
Yeah, thanks for that, laying it out. I think that paints a very compelling picture. I want to go back to Bill because he was talking about GDPR and the sort of the privacy infrastructure. It is different globally, right? These requirements are very different, and the UK may differ again post Brexit. Now, how do you overcome the data infrastructure and privacy issues that we've been talking about here?
It's a good question, and actually, this may be an area I'd be interested to get Patrick to be on this too, because the thing that I worry about is not knowing as much about this as some other people on the cast. All the things that Tom mentioned, I'm worried about the data infrastructure side. I look at things like Ethereum and for example, Fastly, the cloud service provider that just went out a few weeks ago, and as a result, several popular websites without for a few hours. Now that's just a cloud service provider and some websites, but I wonder, and this must be what the central banks are thinking about in terms of, as I was alluding to earlier, when you're talking about keeping your CBD safe, it's a lot more involved than just a Brinks truck. I mean, you need, your data infrastructure, your resiliency. If there's a major outage of a major service provider, that implicates how people can access and spend their money. That sort of goes towards a country's stability. It's worldwide perception. It's a much bigger risk for a country from a data infrastructure perspective. There's an outage than it is for the New York Times website. So I think that must be kind of a major concern, and I wonder how truly open sort of a CBDC system on an international level can be to those concerns. And so my thinking from a I guess barrier perspective is it's going to have to be the gatekeepers in this area. I think are going to have to be the large reserve currency central banks convening sort of at the international level, the SSB, sort of some of the existing infrastructure Tom was alluding to earlier, and relying on that to sort of set robust eligibility requirement for data infrastructure providers, system providers. Because I just, again, not knowing much about this area as others, I worry about relying too much on, these sort of new market infrastructures that, when I look at the paper every day, it seems like there's always, some hack or some outage, and I wonder, would central banks be willing to concede a lot of that control or depend on a lot of these sort of new technologies?
Patrick.
Yeah. Hey, PJ, let me. These are really, really important points, and I think again, this comes down to the kinds of architectural decisions that you make, right? So it feels like this is all sort of one thing. I would argue that it's not, right, and this really goes toward getting the architecture right. And thinking about it. So, for example, a very simple, example here is, there's this notion that, because of all the, the concern around Bitcoin, which is truly a bearer instrument, this question about, protecting wallets and this sort of, that's actually, these things should not be bearer instruments in that sense, right? Because otherwise they're non-recoverable in the case of a hack, and again, you're going to erode trust. So architecturally, and how you go about that becomes, the first question, and those things can be, again, I think it can be dealt with in a fairly straightforward fashion. Then if you get that right, when you go on to, data privacy and that sort of thing, those pieces begin to fall into place. It's a little bit of a thornier issue, but they begin to fall into place. But I think the core point here is we're talking about, this is critical infrastructure. If you do this right, it's the internet, right? If you do it right, that's what you're using. You're using the internet. Certainly, there are some things that you'll need to do to make that more resilient. But I don't think that, you'll need to, extend a national, infrastructure out into other countries, for example. I think standards will address some of that. But it's just getting the architecture right. The interoperability is as Tom talks about frequently, which is absolutely right. The interoperability is key. I think Tom is talking about interoperability among, sort of new systems, legacy systems, and multiple systems, and we think about it in exactly the same way. So that part, again, if you get that right, you can solve some of those issues in terms of, well, how far can this move, while still, retaining that sort of resiliency and adherence to data protection requirements. So they're the most important questions, but they don't strike me as necessarily being, one insurmountable task, obviously. But two, I think we think that there's a very clear path toward, more decentralization than just saying, well, this is, the central bank has kind of the, the lockdown on this infrastructure. I personally don't think that that's, and obviously the way that we approach technology we don't believe that that is necessarily the case.
We've been arguing this centralized, decentralized architecture for decades. I guess my big question, I guess, is what's the benefit of decentralized, and how does it outweigh the risks that you're facing if you're not there? If you're in a centralized environment, you theoretically have more control, though. All the new regulation for banks about how they manage their infrastructure kind of indicate they're not under control right now. So it's a very, very interesting architectural strategy type question. Tom, how do you think about that?
Well, I don't think, and don't interpret the briefings and discussion documents stating anything close to banks are out of control. I think I think there's known issues. The BIS, for example, in cross-border payments a year ago now, in July of 2020, published improvements that they thought were important for cross-border payments, and they put forward kind of 19 building blocks, and we agree with a lot of those, and we've seen that and we've heard that from our customers. So I think the kind of the improvement areas and areas that we could do better, I think those are pretty well known. But I think when you look at these kind of industry type solutions, they're complicated to explore and to make decisions on, and they're complicated to roll out, even with the best intentions of the world. I mean, look at any kind of upgrades that are happening today that are the benefits are very clear. ISO 2022 migration, takes a lot of time for adoption, and not because people don't want the benefits and not because they're resisting a good idea. It's just because there's a lot of things to do, and these are complex programs of work to run. So I think there are good. I think there are very well known improvements. I think there's a willingness to get there. There's always a competition for things that you have to do that are mandated versus things you want to do that are more discretionary, that might drive revenue or improve customer service. But this is what people are paid to do, is to make those trade-offs and to find the right priorities. And then in some cases, in particular in market infrastructure and things that are systemically important, you also need to demonstrate that you understand all of the risk in taking those steps and all of the mitigants in taking those steps, and be able to convey that with confidence to people who oversee you, whether that's on the board of your institution or a regulatory body that oversees what you're doing.
Thanks for that, Tom. I guess look, we're at time and having to move to wrap up, but there's so much more we could go on to. But Bill, I'd like to start with you in the final wrap up question, which is just take a minute. Given all you've heard here, what's the prize for getting this question right? I mean, obviously, lots of barriers, potential new risks. We've heard lots of reasons why it might move slowly, why it might push forward, but without a sense of why are we doing this? I don't get a clear read on how things are going to go. So give us that sense of what's the prize.
Well, I think it kind of, I think it's driven by, the point Patrick raised at the outset, which is, and Tom, which is what's the goals? What are the policymakers' goals here? And it's good to hear some optimism, during this cast about people thinking we can kind of overcome, some of, for me as a regulatory lawyer, seem kind of insurmountable hurdles. It's good to hear that. But I think the prize is, for those countries that aren't really, well integrated into the global payments ecosystem, they have difficulty accessing reserve currencies. They have real significant challenges with financial inclusion, underbanked rural populations. I think, if this is the internet, I think potentially those kind of countries, by sort of pursuing this, they can really dramatically increase of their financial inclusion, increase the ability of banking products and payments to underserved communities. And by the way, that's also relevant in the U.S. and in developed markets as well, which is why our central banks are looking at this too. So I think that's the prize. I think that particularly for those reserve currencies, I think the costs sort of rise as well. So there's a higher cost benefit to sort of going full throttle on a CBDC, at least from a systems agnostic or a totally open system. I think those countries are going to be much more cautious because they're going to be more worried about some of the risks, the potential dangers, and they're going to want to have more control over the infrastructure. Whereas countries, that don't have, as significant concerns when it comes to monetary policy um, and reserve currency, monetary stability, I think they're going to be more aggressive here. And I think the prize for them potentially would be very beneficial for their economies. And gradually, that cost benefit analysis, as Patrick is saying, people will get more comfortable. People will realize what this is. People will sort of develop the right architecture and think about architecture in the right way. And you'll start to see, this become more viable even in more developed, I think, markets. So that's kind of my thinking in terms of the prize and how I see it playing out.
Thank you. Fascinating. Patrick, same question.
Yeah, so it again, it comes down to sort of what are the motives, right? And so it's actually hard to say because you could take a cynical position. You could say, well, look, there's there's a lot of consternation about the rise of crypto, and while everyone will say, well, look, it's not a medium of exchange yet. I think the more intelligent people say, well, give it time, right? It's just things will. If there's a demand for it, a pathway will be found, and so they want to sort of head off that eventuality and say, well, you want digital money, we'll give you digital money. It's your government's digital money, right? So that's one way to look at it. Although it's an ironic way to look at it, because I might argue that the reason that people, or one of the big reasons that people gravitate toward crypto, is sort of eroding trust in institutions, and so replacing crypto with institutional money seems to maybe not answer that question. But if we go beyond that, we could say, well, look, there's certainly something to be said, and I mentioned China before. There's certainly something to be said for the ease in which you can facilitate transactions and interbank transactions and things like that, and how do you how does that play into really say the dollar is the world's reserve currency, and what things can you do, and certainly it's not hard. I suppose on some level, well, at least philosophically, it's not hard to convince some folks that, hey, wouldn't it be great to be able to get out from under the thumb of Uncle Sam? But partly by the automation of compliance, you could make it easier, for these institutions to comply with these things without having to change the regulations, and maybe that's a pathway forward. It's part of what we think about when we think about the automation of compliance. So again, it's hard to say what the motive is in every single capital that's contemplating CBDC, and I think it's clear that it's different in different places. But that's a foundational point. I don't know the answer to that question in every. I don't even know the answer to that question in the United States right now, to be honest with you. So it's kind of open.
Fantastic, Tom. Closing word.
Well, I think I have an answer. To me, the prize, and Patrick touched on this, but to be more specific, the prize is improved transactions. That's really what it comes down to, right? So I think it's a perfectly natural progression as the economy goes digital and payments go digital, that the currencies that are used in those payments go digital as well. So I think there's lots of challenges and lots of reasons, risks to be addressed, and a lot of things to get worked out. But this creates a great opportunity for us. Whether you're looking at consumer use cases or you're looking cross-border payments, it's a great opportunity for the industry, and maybe for some of us, a once in a career type of opportunity. So it's about improved transactions. When you speak to a corporate treasurer, or you speak to your friend who might use a payment-to-payment app to reimburse you for dinner, the people don't care about the payment. They care about what they get from the payment. And if we do this right, and we're able to actually build inclusive networks, then our ability to transact will allow people to get what they really want, which is on the other side of that payment. So I think improved transactions is, to me, is by far the prize in all of this.
Well, I don't think anything summed up on any Redcast more the JWG ethos, which is we got to get compliance to be better, faster, cheaper, with lower risk. And I think that this being a greenfield area where we can finally get out and explore, it's been fantastic to have this conversation with you guys today. I don't know when or how fast this is moving, but I certainly hope we're back here talking about this on a more regular basis. So leave it to me. Thank you all for your participation. It's been a great panel. I know a lot. Patrick and Tom have gotten up very early for this. Sorry, Bill has gotten up the same time as well. So thank you for that. And thank you for subscribing to all our listeners. We've been enjoying all your feedback. Check the website. We'll have lots of links to documents so you can learn more about this exciting topic. And take care. We'll see you soon.
You can download the podcast via Spotify, Apple, and Google. But also, I'd encourage people to come to the JWG website, which, as hopefully you will know, is jwg-it.eu. Go to the Intelligence Hub and create your bespoke library. This is Redcast,
where we shine a light on banking digitization.